Welcome to Golden Brokers. I'm Ariff, and there is an interesting company that might have the potential to be your next pick. Occidental Petroleum, ticker OXY, is a leading oil and gas exploration and production company with operations worldwide. Occidental is focused on enhancing profitability through prudent financial management and strategic divestiture while pursuing opportunities for reserve and production growth. Let's look at the history of Occidental Petroleum. Back in 1920, Occidental Petroleum was founded in Los Angeles by a group of investors led by Edward L. Doheny. Though initially small and unprofitable, the company caught the attention of businessman Armand Hammer in 1957. Hammer purchased a controlling interest in Occidental and helped turn its fortunes around. In 1961, Occidental made a major discovery, the Lathrop gas field in California. This bolstered Occidental's reputation and finances. Another milestone came in 1973 when Occidental expanded into the North Sea and made a sizable oil discovery there. Jumping ahead to 1982, Occidental became the 8th largest petroleum company in the United States, after acquiring City Services Company for $4 billion. This acquisition cemented Occidental as a major player in the oil and gas industry. And as of this month, August 2023, Occidental has announced net oil and gas pre-tax income of $1.1 billion for the second quarter, and market capitalization currently stands at a whopping $55 billion. This demonstrates Occidental's continued success in oil and gas industry today. Occidental Petroleum opened at $62 on August 24, 2023. The 52-week range is $55 to $77. Market capitalization is $55 billion with 884 million shares outstanding. Over the past month, OXY is down 0.05% but up 5.12% over the past 3 months. Year to date, OXY is down 1.86%. The stock has struggled to gain momentum recently despite gains over the last 3 months. Fundamentally, OXY has strong revenue per employee at 2.6 million and a lower P/E ratio of 10.5 compared to the market at 25. OXY also pays a dividend of 18 cents per share, yielding 1.16%. In terms of performance, Occidental Petroleum shows mixed momentum recently but maintains reasonable valuation, high liquidity, and strong fundamentals. In 2022, Occidental Petroleum had a record year, achieving record financial results, operational milestones, and health, safety, and environmental achievements. The company's strong financial performance was driven by high commodity prices and operational efficiency. The company also made significant progress in its health, safety, and environmental performance, including achieving zero routine flaring in its U.S. oil and gas operations and beginning construction of its first direct air capture plant. Occidental Petroleum's financial metric shows improving health after a difficult 2020 during COVID-19. Total assets fell from 80 billion in 2020 to 72 billion in 2022, mainly due to reduced total liabilities, down from 61 billion to 42 billion. This led to an improved debt-to-asset ratio, falling from 76.8% to 58.6%. Cash flow generation also improved. Operating cash flow rose from 4 billion in 2020 to 16.8 billion in 2022 on higher oil and gas prices. Free cash flow increased from 1.4 billion to 12.3 billion. However, OXY maintained high capital spending over 4 billion annually. Revenue rebounded from 17.8 billion in 2020 to 36.6 billion in 2022 as energy demand recovered. After a 14.8 billion net loss in 2020, OXY generated 13.3 billion in net income in 2022. Its profit margin expanded from negative 83% to 36%. Fundamentally, Occidental Petroleum has strengthened its financial profile by paying down debt, improving cash flow, and returning to profitability. But it continues to face capital investment needs. Further analysis of industry condition and management outlook will ascertain long-term performance. If we look at its historical price, Occidental's share price closely tracks crude oil prices. Recently, both have been rising, with OXY breaking above its price channel. However, it failed to break resistance at $66.57 as oil pulled back on slowing Chinese demand. The technical indicators present a mixed picture. Momentum oscillators are bullish, pointing to upward momentum. However, overbought indicators and near-term moving averages leans bearish. The price pullback has created conflicting signals. From technical perspective, caution is warranted until a clearer turn emerges. The long-term outlook remains positive as Saudi Arabia supports high oil prices. Occidental Petroleum warrants investors' attention as an energy company with long-term growth drivers. Its diversified business, including a steady revenue-generating chemical segment, offers stability amidst oil market volatility. Warren Buffett's significant investment signals confidence in the management strategy as the company is re-entering profitability, which attracted the legendary investor in the first place. Notably, Occidental is making sizable investment into carbon capture technology, positioning itself to capitalize on anticipated high demand for emission reduction solutions. Given its balanced existing operation, visionary outlook on clean energy solution, and implicit endorsement from Buffett, Occidental represents an overlooked opportunity. The company's diverse revenue stream and forward-thinking emission focus made it a promising investment as the energy industry transitions. The company's multifaceted business and carbon capture leadership make it a compelling investment in the new energy landscape. In summary, Occidental Petroleum presents a reasonable investment opportunity with risk. Fundamentally, the company has strengthened its finances, but capital spending remains high. Technically, the stock appears overbought short-term but shows long-term upside. Positive catalysts exist, like its chemical business, Warren Buffett confidence, and carbon capture positioning. However, caution is prudent near-term given technical signals. The outlook could improve if oil prices rebound or resistance is surpassed. OXY merits consideration for a starter position to gain exposure with plans to build on dips. Proper risk management is vital. Investors with intermediate to long-term timeframes and higher risk tolerance may find OXY appealing, while more conservative investors may prefer to wait for greater clarity. It's been Ariff with Golden Brokers. Thank you for watching.